Now, great. So just a couple of housekeeping items before we get started. I'll be going through materials today. We schedule about 40 to 45 minutes for the webinar. If there are any questions that come up throughout the time that I'm going through the materials, please feel free to drop those into the Q&A little box there. I'll make sure that I keep an eye on that and we go through any questions that people have on relevant slides. In addition, I'll save some time towards the end of our session together to go ahead and answer any questions that maybe I don't get to throughout the materials. But with that, let's go ahead and get started. Thank you guys again for joining today. I'm Nimish Shukla. I am the co-founder and COO at Liferaft, and we are a full-service HRA administrator. And I'm incredibly excited today to be walking you through and talking a little bit about a white paper that we recently published looking at specifically small group versus individual health insurance premium dynamics. So as many of you are probably aware, there has been a number of years over, I would say the last like 5 to 6 years, where there's been an increasing divergence in the pricing for health insurance in the small group, the large group, as well as the individual markets. With the introduction of the ACA, the individual market has become a real, I think, option for group coverage with the ACA and the HRAs, which maybe wasn't the case 10 years ago, even 5 years ago. And so as we've seen a lot more chatter, a lot more education, and a lot of groups and benefit brokers and benefit consultants looking at and thinking about the HRA, it's really put, I think, into focus the differences that have started to emerge across the country. And so today we're going to talk a little bit about some of the trends that we've seen with data that's been published publicly, but also some of the things that we've seen with clients that are actually utilizing HRAs on our platform. What does it really mean for health insurance, premiums, plan selection, and then also, what implication does this have for HRA specifically? And for us as either company decision makers, if you are heading up HR or you're the CFO of a company, but also for those of us that might be benefit brokers and benefit consultants, how do we really think about a strategy around HRAs? And I think most importantly, when can we think about delivering real value for our clients by utilizing the HRA format? So let's go ahead and get started. What we're going to really start by talking about is a study that was published by Ideon. Ideon is a data aggregation company, essentially, that collects premiums across the country for individual, small group, and large group rates. And they've published a lot of this data, but really looking at, hey, for an individual, right? And in this case, we're looking at a 50-year-old. What is the cost of certain tiers of coverage, whether it's bronze or gold? And really, what are the differences between the individual market and the small group market? So if I'm looking at this chart, where any state or any county that's going to be green, the darker the green, the cheaper the individual coverage is in those counties. And anything that is a darker purple leaning towards black, that's where the small group market is actually going to be more cost effective for your groups. And so when looking at this map, excuse me, there are a number of states that are heavily green. There are a number of states that are heavily purple, and there are some states that are really mixed. You have certain counties where coverage is more expensive in the individual market. You have certain counties that are more expensive in the small group market. I think what this really means, right? If I was to take this and have one key kind of takeaway from our perspective, it's that when thinking about the application of different health insurance solutions for clients that you have, particularly in the group space, it's really going to be very, very regional. And we think about the HRA and the individual coverage HRA, the ICHRA, a lot as an administrator. And so really you're looking, I think, at number one, where can we drive real cost savings for employers, particularly those that have had year-over-year renewal increases. Maybe they're struggling with participation. But you want to make sure that, there's cost savings, but also then thinking about the dynamics of that individual market. There are states where individual coverage is cheaper, but the plan quality or the number of carriers that are available on that marketplace may not be the most attractive for your book of business. And so, really taking this approach on a state by state level, I think, is the right way to do this. So this is a country writ large. Let's go ahead and look at a couple of places where we've seen real cost savings being driven in the individual market over group options that are available. So, I think generally as well, before we jump into the state by state, I think there's a couple of things to keep in mind here. In roughly half of the US states now, when looking at bronze premiums, individual bronze is going to be cheaper or equal to the small group rates, right? That's a little bit of an increase year over year. We've seen a lot of, I think, we've seen a lot of state-by-state support on the ACA and the individual market exchanges, which has actually helped, I think, continue to keep those prices lower. And so again, when you have groups, particularly that are in a situation where they may be getting a year-over-year rate increase, the individual market and giving their employees access to the individual market can become a real, I think, value driver for any of us that are thinking about, benefit brokers. And then, today in about 16 states, the silver and gold premiums are going to be equal or less than the small group. So, if I think about what does that really mean for us, I think there's two things. Number one, when thinking about an employer where transitioning to the individual market, right, utilizing the HRA is going to be a good fit. I think, in those 16 states where silver and gold are cheaper, that's certainly a no-brainer, especially when you have a group that has about that type of coverage in place today, silver or gold. There's a number of states where you're going to drive a pretty significant cost saving for employer groups, even at that silver and gold level. I think in general, what you're really seeing is that individual market rates are driving towards parity across the board. And to support that, you're starting to see a lot of the large carriers that many of us are familiar with, whether it's a Blues or Cigna or United or Aetna. They're actually continuing to increase their coverage in the individual market. And so really, regardless of which county you're in, the reality today is that if you're on the individual market, you're going to have a plan that's available from one of kind of the BUCA names or a regional carrier that's really, really focused on your area and your counties. So again, I think what all of this kind of comes down to is the individual market is becoming a real replacement for the small and even in some instances, large group market. Now, how you actually deliver that value, either as a business owner or a broker, is going to be by utilizing the HRA alongside the individual market plans. But that's really, I think, becoming a sustainable and viable solution for company owners and benefit brokers, especially those that are becoming more cost sensitive as we start to see, healthcare inflation continues to increase. I think this is going to be a bigger and bigger part of the market and one that all of us should really get familiar with. So let's look at a couple of states where we've seen pretty significant cost differences between the individual market and some of the small group and the large group market. I'm not going to walk through every single state, but I am going to talk and make a couple of points about some states specifically. So I want to start with Ohio. Ohio's been a really interesting one. As you can see here, a good part of Western Ohio is actually on the high end of cost saving. So the darker the green, the bigger the cost saving. And so you're going to see, close to that 50 to 54% cost saving for a bronze through gold level plan when comparing it to the small group space. So for those of us that maybe our businesses are located in Ohio, or we have a large number of our employees located in Ohio, or benefit brokers where you have a book in Ohio, I think it becomes a really, really interesting state to be looking at to start to consider a transition to the ICRA. And I think there's one other point that makes Ohio really interesting, which is the marketplace in Ohio, when compared to a lot of other states, is actually quite strong. You have a depth of carriers, pricing is really good, and then you also have pretty good plan quality and selection that's available to employees. So, short story on Ohio is if you have clients there or you're located there, you should really be just looking at whether the ICRA is an option for you as a business owner, for your clients, because you could really be driving a good amount of cost savings there. The other state I'm going to talk a little bit about right now, and then we'll talk a little bit more about it later, is Indiana. Now, if anybody on the call is familiar with the individual coverage HRA, what you've likely seen in the news over the last several months is that Indiana, the state legislature in Indiana, has actually passed a tax credit for company owners that are implementing ICRAs. So Indiana is a first state to actually incentivize business owners to transition their employees from group health insurance, either transition them from group health insurance into the ICRA or offer health insurance for the first time using this innovative account structure. And so that's a really interesting state to keep in mind here. I think, again, when thinking about this through the lens of cost savings, if you've got a pretty wide cost divergence on individual versus group, but you're adding in the layer of a tax credit, that could really incentivize business owners either to offer benefits for the first time or to be looking again at transitioning over to this model of health insurance. South Carolina, briefly, the level of savings in some counties in South Carolina does get pretty meaningful, up towards 37%. However, one of the things about South Carolina, I think, to keep in mind is that may not always be the right, in individual coverage and individual marketplace may not be the right solution everywhere in South Carolina. And that's really due to, I think, plan availability. We have a couple of, I believe, a couple of the BUCA names that are available in South Carolina. But really, you have more smaller regional carriers where I've seen that the plan design isn't necessarily as attractive as what you might find in the full kind of group market per se. Excuse me. Let's look at a couple of other states. There's two I want to talk about here in particular. The first is Colorado. So Colorado. Again, in Western Colorado, you're seeing some counties where the cost difference is pretty high. From what I've seen and heard of in Colorado, particularly with the relationships we have with benefit brokers, Colorado is another state that has a really strong marketplace in terms of depth of carriers, depth of plan quality, but also pricing. And so that's another one really to keep an eye on. I think that, again, if you have employees in Colorado or you're a benefit broker with clients in Colorado, that's a really interesting one to take a look at. And then I want to mention New York here. New York's an interesting one. They have cost savings, but generally speaking, I veer most clients that are based in New York or benefit brokers that have clients in New York, I steer them away from an individual coverage HRA. And really the reason is we've seen that the plan quality in New York, given how generally expensive that state is from a regulatory perspective, I don't know that plan quality in most parts of New York, especially as you get into Manhattan, is really going to be attractive enough for clients unless they don't really have any other option for health insurance. And so from a New York perspective, my general sense is keep away from the individual market if you can. But again, if there's really no other option, you can at least help drive some cost savings here in the state of New York. And then, lastly, where I think this starts to get interesting is when you see some of these combo states. So Florida is a really interesting one. Florida, we've seen good amount of HRA adoption. The marketplace in Florida, particularly South Florida, really has picked up steam, I think, over the last number of years. But you're seeing a number of counties throughout Florida where that cost difference and that price, that value and the price savings that you might be able to drive in certain places isn't always going to be the case. So one of my things, one of my general approaches to this is, if at all, if you think an HRA could potentially drive cost savings, that is a great time to reach out to us. Our approach is, let us run the numbers for you. Let us take a look at what an HRA would look like. And if the value is not there, it's not there. But if it is, there's an opportunity then to really, again, if you're a decision maker or you're a broker, there's an opportunity here to drive, I think, pretty immense value, both for an employer perspective from a cost savings, but also for your employees, really opening up the plans that are available to them, and plan selection and the quality of plans, and making sure that the plans that are shown and available to them are going to be really local based on their zip code, ensuring strong network coverage. Um, Now, there's a couple of things to keep in mind here, where not every state is going to be cheaper, right? There are a number of states here where, on a pretty much state basis, the individual plans are more expensive than what you might see in the small group space. And that can be for a number of different reasons. I think in those states, particularly if your company is domiciled there, or or you have a large employee swath there could be reasons to look at the individual market, but the big driver is not going to be the cost saving, unless you have groups that are community rated, but have been, again, facing kind of year over year annual re-rates on their health insurance, right? We've had a number of clients over the last year that are getting 15 to 40% rate increases year over year. And when that happens, at some point, group health insurance or health insurance writ large can become unsustainable for a business owner to be able to offer. And so in those instances, I think, again, always looking at, hey, does a transition to ICHRA here make sense for you? Should we want to look at a couple of options where you could move your employees to the individual market? But it isn't always necessarily going to be the right fit, especially in some of these states that we've outlined here. And again, in those states where you're seeing mixes, I think it's really going to come down to where your client's located. But again, we can always look at that for your company or for any clients that you might have as a benefit broker. Um, I think the real interesting thing for us to be thinking about, and the question here is, are these dynamics going to transition at any point? And I think they will continue to, on a state by state basis. There's a lot that's happening in the ACA markets, depending on the state, with things like state-backed reinsurance funds to help subsidize effectively the cost of individual enrollment. All of that comes into play when we start looking at what's going to happen with pricing dynamics. I think, the other thing that we'll have to keep an eye on is, if kind of the post-COVID trend of higher health utilization continues, that is likely going to have a pretty big impact in the small group and the group space generally, which could further drive cost savings in the individual market. The last thing I want to mention here on the pricing differences is all of this, the differences in pricing does not take into account the availability of federal tax credits. And that becomes very, very important in that smaller group space. I think especially for those companies that have never offered benefits before. So what do I mean by that? There is a version of the HRA that is designed specifically for those companies with under 50 employees, where offering of that HRA, it's called the QSERA, Qualified Small Employer HRA, does not preclude employees from utilizing a federal tax credit if it is available on the individual marketplace. So I think that is a really interesting way for if you have a small business and you've never offered benefits before, or let's say you are a small business and offering a fully insured plan, but it's becoming really hard to continue offering it. The QSERA becomes a way for you to incentivize your employees to look at the individual marketplace. And depending on what your employee base looks like and their wages, they can still be eligible for those tax credits. And so that really, I think, becomes a key differentiator when thinking about the individual marketplace versus small group, which is offering that type of account does not preclude your employees from having access to the tax credits. And that can fundamentally change the price of health insurance for your employees or your clients' employees. And so that's a really important thing to keep in mind here, which is in certain states, even if coverage is more expensive, the availability of tax credits can really change what that entire composition of pricing looks like for both employers and for employees. So we talked a little bit about Indiana, but I want to bring a little bit of color to it. Again, as I mentioned, Indiana has been the first state to really incentivize ICHRA adoption. So effective, kind of this year, Indiana is going to be offering an additional tax credit to any employer that is offering the individual coverage HRA. So the first year that the HRA is being implemented, employers are eligible to receive a $400 tax credit per employee, and then $200 per subsequent year that they're covered. I think what Indiana is doing is twofold. Number one, they are looking to boost enrollment through their state exchange. But number two, I think when thinking about small businesses in the state of Indiana are really writ large that have never offered benefits before, this is a really interesting and effective way to get those small businesses to offer benefits. But really what they're doing is incentivizing an employer to educate their employees about the availability of health insurance through the state. And I think what Indiana's view and objective is to really start to address the uninsured population vis-a-vis the employer network. And so this is going to be a really interesting case study and a place for us to watch this year. It is likely that if this is successful in Indiana, you're going to start to see more states have similar plans across the country, really looking to boost individual market enrollment by incentivizing employers to transition their employees over. Again, if I'm thinking about this from a driving value at a company perspective, right, from a cost saving particularly, this really now becomes kind of a twofold benefit, I think. If you have groups that are offering benefits today in Indiana, from a group perspective, not only is the Indiana market going to be 14 to 40% cheaper than the small group market, but you're also then going to be able to layer in this additional tax credit. And so this becomes a really interesting place for us to watch. I think, what happens here could end up really impacting ICHRA adoption and the kind of state and policymakers' view of how we get more people onto the individual exchanges. Transitioning a little bit into the HRA, I think we're already starting to see this account type really start to take hold across the country. So there's been a 2x increase in terms of the number of companies offering, whether it's a individual coverage HRA or the QSERA, but it's doubled in terms of the number of companies offering this. In addition, just year over year, we've seen, just over a 60% increase. And even in that large group segment, with 50 and over, you're actually seeing a broader adoption of HRAs. And I think a lot of this is driven by these cost differences that we've talked about in the first half of the webinar today, which is if you're looking at an individual marketplace that is significantly cheaper than what you're offering in the group space today, it becomes very difficult for business decision makers not to want to seriously explore that transition. I think especially if you are able to offer an experience, right, for the employees that doesn't become overwhelming when it comes to health enrollment or just implementing an HRA in general, you're able to take advantage of the cost savings and all of the kind of institutional support that's driven into the ACA, and really extend that to employers and employees. And I always think about this, right, from a before I started Liferaft, I was a co-founder at a company called Blueprint Income, which was focused on the guaranteed income space. About 20 years ago, we had a shift from defined benefit to defined contribution in the retirement space. Companies would offer pension plans. They found it to be too expensive. It was difficult for them to do. And so we transitioned to this defined contribution, the defined contribution universe that we live in today with retirement. I think the same thing can happen in the health space, and is likely starting to happen where groups, companies, company decision makers, and benefit brokers are starting to question companies' capacities to continue offering group health insurance where there's a pretty big risk that you're going to see that cost increase year over year over year. When thinking about the HRA, it really transitions groups into defined contribution. You set your budget, you give everybody a monthly amount, and they can use that to buy health insurance, individual health insurance. That becomes a lot more manageable over time. And the second thing is because the individual markets have so many people on them, the risk pool becomes bigger. And so the 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 cost increase, if there is one year over year, should continue to be more muted, because you've really moved people into a much larger risk pool. So we're starting to see it grow. It'll likely continue to grow year over year. I think the reality of what we've seen is, the market isn't anywhere close to where it's going to be. It hasn't reached its potential at all as it relates to HRAs. I think the real challenge in the individual coverage HRA market, and one that we're actively trying to solve, is when you have an experience of buying health insurance, so particularly in the group space, that employers and employees are comfortable with, right? Everybody's familiar with how to offer benefits, what that experience looks like. Your employee goes into the portal, they pick the one plan that they want of the three that you've chosen, and then they're done, right? That is not today what the ICHRA experience is. And I think it is incumbent on companies like us to really make a process that helps employees and employers feel like the switching cost or transitioning cost is not as high as it feels today. If we're able to do that, I think then we have more companies able to take advantage of the pricing dynamics, and we have employees being able to take advantage of the greater plan selection and availability, and we really move to a place where I think people are better managing health risk from a company and an individual perspective. And I think for our broker partners as well, the same thing holds. There is a well-defined process today. Brokers play an important role in HRA adoption, presentation, implementation. But the market has to give brokers the right tools to be able to do that. And so that is actively what we work on. What are some of the challenges that we've seen in the HRA market? I've addressed this a little bit, but number one, health insurance enrollment is really challenging. I think the single biggest, one of the biggest things that we hear from companies today is, how are my employees going to select from 90 different plans that are available? And so, that becomes a key area of I think focus for platforms like us, which is we can help deliver a more seamless experience on health enrollment. Make sure that employees are getting the right coverage for them, but do it in a way that doesn't feel overwhelming. We haven't talked much about this, but there's a lot of flexibility that can be built into HRAs. So um, today's webinar and our last white paper was really focused on the pricing differences between the individual market and the group market, which is a key reason that I think you're seeing more HRA adoption. But the reality is even if you look at those higher end tiers of coverage, there are ways to drive cost savings for your employers by adding in other coverage through HRAs. It doesn't just have to be health insurance. And so there's a lot that these accounts can do to really help companies, again, and benefit brokers create packages of benefits that are going to be a win-win. They're going to help employers drive cost savings, and they're going to actually ensure that when you make a transition like this, you're not meaningfully degrading the coverage that is available to employees. It's just that you might be moving around how exactly that coverage is deployed. And lastly, I think one of the challenges we're going to have to keep an eye on the individual market, right? My view is that again, if we see the trends that have kind of been happening in the group space, if those continue to happen and you see these cost increases, I think the pricing pressure on groups to look at a transition to the individual market is going to continue to be there. Now that could change. It always can. So that's one thing we have to keep an eye on. But I think if the last couple of years, been a have been a trend of sort, I think we're going to continue to see that happen. I think in terms of where are there opportunities of growth and when should folks be looking at the HRA, I think, I just mentioned this continued cost pressure in the group market. If we keep seeing that, I think the HRAs are really going to become an account that is favored by many business owners and benefit brokers as a way to deploy your benefit budget in a more creative and cost-effective way. And lastly, if we're going to start to see more state adoption and incentivization of HRA utilization, again, Indiana is going to be a really important, I think, an interesting use case for all of us to keep an eye on. But if you see Indiana's program succeed and there's high utilization and those enrollment numbers go way up on the exchange, I think what you're going to see is you're going to see a lot of state legislators looking at a very, very similar incentivization program across the country. I think in addition, HRAs, again, as we've talked about, there's a full customization available. And so when thinking about either replacing an existing benefit strategy and levels of coverage and package, that is most likely available through an HRA, an ICHRA with additional layers of coverage. All of those options are available through the HRA. And I think one of the last areas is really with those trusted advisors that business owners are using today, whether it's a PEO or it's a benefit broker, benefit consultant, all of these organizations play incredibly important roles in the benefit ecosystem today. And HRAs and ICHRAs are going to are going to struggle in adoption if the process for the employer, for the employee isn't seamless, but also for these trusted advisors, for those PEOs, for those the benefit brokers, for the consultants, a process that simplifies not just the administration of the HRA, but really being able to put together a plan design. How does this look for my clients? How do we think about their strategy for reimbursing health insurance premiums? What does it need to be? What about compliance? Again, there's a real opportunity here, and this is again something that we've been focused on as a HRA administrator, but really starting to arm those trusted benefit advisors with the right tools and the right technology to be able to provide this really valuable solution to their clients. Um, and I'm going to go ahead and skip those, but that's what we have prepared for today. I really appreciate everybody taking the time. Any questions? Happy to stick around for a few minutes and see if folks have any questions that I can help answer. Great. I don't see any questions yet. I will stick around for a couple of minutes. If you don't have a question, again, appreciate everybody for joining today. Wanted to mention we did record the session, and so I will be sending around, or our team will send around a recording of today's webinar. If you have team members that weren't able to join, please feel free to share the recording with them. Don't forget to download the white paper as well. And as always, our contact information will be there. Please reach out if you have any questions. But thanks everybody for joining. Really appreciate it.